Hey, what's going on YouTube? Welcome back. It is Travis here with JT Wealth. And now today's video is a little bit different. We're not talking about dividend stocks today, and we're not talking about FIRE. But what we are going to discuss is three rapidly expanding growth stocks that are held heavily by big ETFs in the US. And I want to showcase these stocks to you because some of them have the potential for triple-digit upside. So let's get into it. Alright guys, welcome back. Thanks so much for joining us. If you're new to the channel, I want you guys to know that we provide financial news here. So what you're going to see sometimes is articles that have come out on different news agencies, and we want to bring that to you guys so that you don't have to sift through the multitude of articles that exist every single day on multiple financial channels. I also like to talk about FIRE, or Financial Independence Retire Early, and sometimes motivational entrepreneurial material. So that is kind of my little triad of information I like to touch on here on the channel. So if you're into that kind of stuff, like the video, subscribe to the channel, and stay up to date with everything that I'm putting out. Alright, so mentioned in the intro, we're going to talk about three rapidly expanding growth stocks that Cathie Wood and ARK Invest is still holding in their ETF portfolios. And this time, you have a chance to buy these three stocks at a steep discount, while Cathie and her team still believes there is the potential for triple-digit upside in some of these stocks. Like Lamar Burton and Reading Rainbow, don't just take my word for it. This article came from MoneyWise, and it says Cathie Wood holds these stocks for triple-digit upside, and they're on sale. This came out just yesterday morning, guys. And it says stable dividend stocks are great for risk-averse folks, but if you're an investor looking to add some pop to your portfolio, nothing beats long-term upside of rapidly expanding growth stocks. So what we're looking for here is companies that are growing their sales and their earnings at especially fast paces. And they have a higher appreciation level than the average stock due to the fact that they're growing so fast. And oftentimes stocks like these can provide triple-digit, even quadruple-digit growth in a shorter period of time than you would expect. And if you're like me, you want to know where the smart money is putting their investments. So we look to large companies and large investment firms like ARK to try to determine where the future of investments is going. ARK has a fantastic ability to understand the growing networks of disruptive technology and massive innovation. So all that being true, let's take a look at the first stock of the three we're going to talk about today, and that's DraftKings. And DraftKings has grown its revenue at an annual average rate of 50% over the past 5 years. But over the past 5 days, the stock has shed nearly 10%. Now, as of September 21st, Wood's flagship ARK Innovation ETF, ARK-K, held about 10 million shares of the daily fantasy sports giant, worth about $570 million and representing about 2.7% of the portfolio. So if you're a long-term holder and an investor like myself, and you see an opportunity to get into a fantastic company at a 10% discount, that is the perfect opportunity to take advantage of dollar cost averaging and grow your position if you already have one, or start a position in a company like DraftKings. Now, always liking to show multiple platforms so that you know the research isn't just coming from a single article, take a look at the DraftKings page on TipRanks. They're trading today at about 53.13, but they have a strong buy rating with 16 analysts giving the DraftKings stock a buy or a strong buy. Also, the analyst price target for DraftKings is almost a 36-something% in the next 12 months. That's insane. It's, 36.33%, up to a $72.43 12-month price target on DraftKings. That is definitely solid growth. And given the popularity of sports betting and fantasy sports and people not necessarily being able to leave home and gambling more online, it is no surprise that Woods loves this stock. In its most recent quarter, revenue skyrocketed 320% year over year as 1.1 million monthly unique paying customers engaged with the app during the quarter. And if you think online betting and online gambling is just a really small niche, it's not. The big brick and mortar casinos like the MGM Grand, Caesars Entertainment, all have started their own online gambling options. So this is definitely something that's not going away anytime soon. All right, number 2 on our list is Shopify. All right, we have an e-commerce giant here, growing its revenue at an annual average rate of 70%. And currently, ARK-K owns a little more than 559,000 shares of the company, worth over $802 million. And at 3.8% of the portfolio, it's ARK-K's 7th largest holding. Again, taking a quick peek at the tip rank screen for the Shopify stock, it is trading at 1471.05 when I screenshotted this image, but it has a 17, almost 18% potential upside in the next 12 months to a 1734.74 price target. And we have a lot of coverage on Shopify. 26 financial analysts tracking this one for an average of a moderate buy. Shopify has grown into one of the leading e-commerce platforms for small businesses. And in the second quarter, they achieved its first ever $1 billion in revenue quarter, as their gross merchandise grew to a record $42.2 billion. Yes, you are also competing against obvious stocks like Amazon and eBay, but they're already such big networks, and the Shopify software niche may be a little bit more attractive for people looking for a larger upside. All right, last on the list today, guys, is Palantir Technologies, and they have grown into the top line at an impressive clip of 47% over the past year. And ARK-K owns just under 26 million shares of the data mining technologist, roughly worth about $688 million. And this investment represents ARK-K's 11th largest holding with a portfolio weighting of 3.3%. Unfortunately, not all the analysts believe in Palantir Technologies, and this is something that we are quite comfortable with, because as it turns out, Cathie Wood and her disruptive technology isn't everybody's niche, right? Nobody is universally accepting of Cathie Wood's ideas. However, I mean, it's no different than looking at Tesla, right? She's a huge believer, but you have so many bulls and so many bears, and this is the exact same thing we're dealing with here with Palantir. You've got a $27.63 current price target, but a potential for a negative 13% downside in the next 12 months to an average price target of $24. So what this really tells me is that people don't understand fully what Palantir is capable of and how it will be utilized in the future. Working in a community that does utilize Palantir, and I've been working with Palantir on and off since 2009, I can tell you it is an absolutely fantastic product, and it has a lot more opportunities than just working with the government. So I foresee a lot of growth in Palantir, but it might be slower than you'd expect. I don't know exactly how they are going to branch out, but when they figure that out, it's going to be pretty awesome. And since I do hold Palantir, and I've watched the most recent like 9% drop we've seen in the Palantir stock over the last couple of days, it is definitely a great opportunity to purchase more and continue dollar cost averaging into my position, which is exactly what I did today. So if you are thinking about jumping into the Palantir, do so at your own risk. Make sure you do your own due diligence. I'm not telling you what to buy or what to sell. Just know that it is an option available to you, and make sure that you decide for yourself whether or not these companies, much like Palantir, are something you'd want to invest in. Alright guys, but that's it for today. Those are the 3 stocks that Cathie Wood is still holding that are definitely trading at a discount today should you decide that you want to invest in these companies. And know that she has not started just selling off her positions just because we're down up to say 10% on a given stock, right? That is not the way these large hedge funds trade, and that's not the way you should trade. If you're a long-term investor, you need to ignore the ebb and flow. These companies will continue to grow in the long term. Year from now, 5 years from now, 10 years from now, you could be looking back at the prices you're seeing today and thinking, man, I had the perfect opportunity. But again, this is all just for information and entertainment purposes only. Make sure you do your own due diligence before investing in anything. And as always, guys, thank you so much for checking out the channel. If you liked today's video, give me a big thumbs up. Consider subscribing to the channel if you haven't already, and leave me a comment in the comment section down below letting me know what you think about these 3 stocks or just about Cathie Wood and ARK in general. Thanks as always, guys. Until next time, bottoms up.